management so they know where to trim, where to add, how to look at that. So as we go through the month of August, we're not still trying to figure out how we're going to make this thing balance. So each of you guys, I'd love to hear your all's input on what's important, what your feelings are. So if you guys want to take the floor, any particular order, I'll call on you. And you don't have to comment if you don't want to, but I'd certainly love to hear that. Councilman Gonda, you want to go first?
No, I'm good. I mean, I already said my comments. Well, priority to me is streets and infrastructure, so just want to focus on that more than anything in housing.
Okay. Councilwoman.
I agree. I mean, I remember when we, set these pillars up, everybody was on the same page about, economic development and all that, and how were we gonna get there? So with the end in mind, we gotta move forward. And, as much as we don't like to raise taxes, and I'll be the first to say it's not gonna feel good or look good, but how are we gonna get to the end results?
Councilman Hernandez.
Mr. Reyes, are you finished with yours?
I was gonna let Santos speak a little bit about the revenues, and then if that's okay, then
Okay.
Mayor, Council, thank you very much for having me today. As Mr. Reyes alluded to, what you have before you is a culmination of a lot of months of hard work, a lot of workshops, and discussions as to what should be going into the budget and what should not be going into the budget. In fact, Mr. Reyes has done a great job of actually cutting the budget. The first budget that we did propose back in June was $400,000 more. So what you have before you right now is our balanced budget, as we promised that we would do. Part of that balance comes with an increase in taxes. We also utilize the new money from STEC that we're anticipating this following year. The big unknown will be our sales tax, which, as you all know, the pandemic doesn't seem to be going away, so that will affect our revenues going forward. One of the key areas that I wanted to focus on is that the balancing part. The staff has done a great job of actually presenting their needs, and part of that includes including streets. Part of that includes increased staff. For the past 2 years, I believe that we've been running in an attrition, and we can get by with this. But going forward, as we endeavor to secure grant money and bond money, I think we need to have that type of mentality that operations are operations, and our capital needs are our capital needs, and they're funded in other ways. Right now, I think that we have some expensive debt that we need to continue to fund. Part of the 94-cent increase, or 94-cent that we're proposing, almost half of it is for debt service, and that's going to continue to be the case. And until there is growth, and until our tax base grows, we're going to have to deal with the revenue streams we have. I mean, one of the questions was, how do we increase tax? How do we increase revenues? We don't, except by the means that are available to us. There are federal grant monies available, but you actually need to pursue that. So maybe there should be a consideration for a grant writer that's their job, to secure as much grant funding as we can. That certainly will help. But like we've mentioned, for the smaller grants that we've had already, you jump through a lot of hoops, and sometimes the projects still have issues even though they're free. So if you go with me to the summary and then the revenue side, I'm not sure what page that's on, but I just wanted to go over briefly as to what some of the components of our revenue streams are.
For the general fund?
Yeah, we're going to focus on general fund and utility fund. That's our bread and butter, and that's where we deal with operational issues. Page 2 of the general fund revenues. It's a detail of the summary that's available on page 1. It starts with ad valorem taxes. We got our 2018-29 actuals and our proposed budget to the far right. Are we all there?
Mm-hmm.
Yes? Okay. Well, the three main components of our revenues revolve around ad valorem taxes. Towards the bottom of that first paragraph, we have our I think that's an error, but the 1.25 million should be in STEC,
Yeah, that's where it's.
and the city sales tax of $2 million for a total of $5 million. So just to get a perspective, the ad valorem taxes are 30% of our budget. The STEC money is 22% of our budget, and sales tax is 37% of our budget. Pretty much, if you look at our actuals, we're always going to be collecting our ad valorem taxes, a little bit over 94% of it. STEC money comes in because it's under contract, and sales tax money is the unknown at this point, which fluctuates. It's basically down 15% from prior years. Right now, we were anticipating a steady amount of sales tax, but again, that's the unknown. The beauty of this is that for the next 2 years, you do have the flexibility to fix the streets that you want, to plan for multi-million-dollar projects because of that $1.2 million that will be coming in from the federal government, and then another $1.2 million that should come in the following year. So this is the balanced operational budget. There are some excesses. Yes, sir.
A quick question, the transfer in fund balance under?
No, that should be up. That should be up one line item. It should be as called STEC. You know, it's for it's.
That's a step, right?
Yeah, that's a STEC.
You have it under franchise fees, is that what you're saying?
Huh?
Under revenues, the revenue summary is under franchise fees, the second line. You look at, we're looking at the year-to-date.
Yes. Yes.
That's
where it is.
Yes.
So yeah, it needs to be reclassified, but the 1.25 million is a STEC money that's going to be coming in.
That's not my question. My question is this, in 2019 and 2018, it was 486, 496.
Mhm.
For the current budget is 401. The collection is this year, right? We're going to collect it all next year? That work?
No, it's a classification error. It's under 4104. And they're under Medina Electric franchise. That 1.2 million should be
there. It shouldn't be under franchise fees, it should be under taxes. Because it's in payment in lieu of
Yeah.
taxes.
42 what?
4204. That's where it hit. It should have gone in to another account.
If you look at your page 2 there, you look at franchise fees, it references $1.5 million in franchise fees on your revenue summary on the first page there. That franchise fee should be about $250,000, and taxes should be a little over $5 million because
Correct.
around $5 million because that step money should have hit taxes and not franchise fees.
It's just a misclassification. We tried to correct it in our proposed 2021-22 budget. But either way, it's going to be, in total, we'll receive a little over $5 million in taxes, and that's what's flowed into our balanced budget.
Okay, but how much are we getting from STEC?
1.2 million, 1.250.
And we're gonna get 1.2 every year?
Until,
We are looking,
Yeah.
yes, that's looking that way. The reason I say that, I've already verified that for this year's values, we should get the 1.25 million, yes.
so that's what's rolled into our general fund budget. Again, like I said, there are some flexible aspects and good things that are coming because of the federal money that's coming in. I believe that it will help the city move forward as we get our 2021 audit out and we assess where our financial position is. That extra money will help secure the funding that we're going to need for our infrastructure projects, which begin with the master plan and those drainage studies and things of that nature. Are there any questions on the general fund?
Santos?
Yes.
So you're saying that we can't gain more revenue on permits? You know, because I know that our fees here is part of permits, and we don't even do permits for everything. that
Well-
we can implement permits that would increase our revenue?
Well, I'm sure it'll increase it a bit, but.
I mean, I know it's not gonna be a
Yeah, it's
dramatic
not
change.
much- yeah, for me, I'm talking about, material items, if 90%, 80% of our budgeted come from those three revenue streams. Well, yeah, there's gonna be, a slight increase if you increase your permits and other areas that are, you know, from my perspective, are miscellaneous.
I mean, because there's permits that you pull here in the city that would cost you $20, $40 versus you go to another city that would cost you
Sure,
$500, $600.
I'm sure that those are some kind of discussions that the city manager can have, and, from the.
I mean, because
yeah.
we're talking about getting everyone's salary to match everyone else's around us and doing this, doing that, but yet we're not matching everything else that should, be matched as well.
I completely agree. Yeah.
you know what I'm saying?
Yeah, yes, I mean, there are areas that you could increase, and it certainly would add to our revenue, yes. Okay, well, if there's no other questions, I guess my only other comment would be that the rate increases and the tax rate increases are in line with what's allowable per the state. And it's something that I mentioned in the past 2 years. Our tax rate has been below. We haven't had an increase for the past 2 or 3 years, and that's sort of corresponded with a decrease in our sales tax revenue and an increase in expenditures. And one of the basic tenets of accounting is the time value of money. What we spent last year can't buy what we need this year. So yeah, there's going to be increases, and that all that is rolled into the amounts that get paid to employees to keep the talent, and that was part of the process for the rating or our salary study, and that allows us to stay competitive, gives us the flexibility to increase everyone's salary to match inflation. And if we don't have that, then we have a lot of ambiguous salary rates that get paid to this one and not to that one. And if we can take all that subjectivity out, then we have a great basis that you can gauge from 1 year to the next. So that's my spiel on the general fund. As for the utility fund, again, if you look at, I'm not sure what page it's on, but it's the financial summary for Fund 35 for the utilities. And then we'll go over the detail. Pretty much the same process that occurred with the general fund occurs with the utility fund, but in a different operational capacity. The division managers that have come in with their needs to continue to operate the system that's in place to provide services to the citizens, or utility service to the citizens of Pearsall. And from the initial budget that we did present in June, there has been $200,000 cut from that budget, from the budget that's balanced today. The only difference is that we're limited, our revenue streams are limited to the rates that were approved last year. So what I've done is gone ahead and used Mr. Stoneman's projections for the revenue, dropped them in. The revenue streams, the majority of the revenue streams come from water sales, our natural gas sales, and our sewer sales, which is a component of our water sales. And basically, that limits how we balance the budget. There's only so much revenue that can come in. Very, very conservative. I believe that it'll increase throughout the year as the meters and some of the infrastructure gets repaired, and we change some of the methodology, the way things are read, and being just more accurate. The numbers that are in there right now are basically part of the history, and part of that history is our inefficiencies. So once we get to a place where we're comfortable and sure about what's being read and what's being used and how it's being billed, then these revenues will significantly change, because we're not losing the water that we're losing now, at least on paper. I'm not sure, I don't think it's running all over the place. I think we're just missing, I know we're producing the water and we're distributing the water. We just can't seem to get an accurate read on it, and that's affecting our revenues. And it's gonna be I don't want to say a decades-long process, but it's going to be a process to get us to a place where we're efficient. And it's not something that happened overnight. This is something that was tried, that council tried to address in 2016. We didn't quite get there. And again, a project that it's done, and we're still paying for it. Almost $2.3 million in debt that we're paying for meters that aren't operating as they should. So I think going forward, there's good things on the horizon. We got some good people, and we got a city manager that's cognizant of some of the areas that need to be addressed. And from the financial perspective, that flexibility that I was talking about with that extra money will help secure the funding that we need, or the city needs, to start planning for the future. And it's going to be in increments, $5 to $10 million a year. Your financial advisor, whoever that's going to be, will get the best financing plan possible based on our financial situation at the time, based on our 2021 audit. But that's going to be based on the planning and getting an actual cost to the infrastructure, and then we'll have it phased in, and I think that's probably the best thing I can say about the budget that you see before you. It's the foundation of the city going forward, and I'm happy to be a part of it.
I have questions, Jeff. So how does having assets?
Excuse me?
How does having assets help us?
Well, you need to be financially secure, and having the cash balances to pay the debt that you're requesting, having future revenues flow based on rates. It's just like anything else. If when you go float some debt on your personal side, they look at your revenue streams. Do you have a job? What does your tax return say? What are your W-2 say? And based on your creditworthiness, then you're able to go to the market and sell the debt that we're proposing to sell. And that's where you get your bond ratings. It will be, I'm not an expert or anything like that, but your financial advisor will set the course as to how and where we can sell that debt, how much we can sell, how much the market will tolerate, based on our financial position. We might have to start off small and establish some kind of creditworthiness to the market. Right now, our creditworthiness is based on the private sector. The public market likes public history. We don't have any. So that's where having a nice reserve, a nice cash balance, and a council willing to understand the rate component to securing the debt necessary to implement the infrastructure improvements.
Okay, so if everything goes according to plan,
Mm-hmm.
revenues, everything, what kind of fund balance are we looking at next year?
Well,
At the end?
well, from
Projecting?
right now, the utility fund has no fund balance. They have, based on the 2020 audit, there's $6,000 in the bank, and they lost $745,000 on the bottom line. So it's, from my perspective, there's a road to go down to, and part of that is actually looking at the budget that's been proposed, and it's not going to go down from there. I mean, this is I would like to say it's not, there's no bells and whistles. This is what it takes to operate our utility fund. And after that, then there needs to be a decision as to what we need, or what rates are necessary based on the current budget, and the future projections as to what rates are gonna be necessary to create a reserve to pay the new debt. Yeah. Because right now, we're just operating at a deficit. So
Santos, can we, with full,
it's like, what?
with full faith, can we say that it's the rates, or can we question whether it's the loss?
I can't say with.
Because we could continue to be raising rates that we have for the
That's right.
past 10
That's
years,
right.
but if our loss is there, then
Yeah,
what good is it raising rates?